Ifeoma Onyejekwe, fixed income trader at UBA, joins us now to unpack how the markets are trading right now. Ifeoma, it's a pleasure to have you on the program. So let's begin with how the forex market activity is impacting fixed income.
Well, for now, everyone is quiet. So they are preparing their bills, like you rightly said, to participate at the retail auction. So provisions have been made. Market provision liquidity has been made. Today, the CBN also carried out industry CRR. It affected some banks, but not as much as last week. So for now, market players are just quiet, readying their bids for the auction.
And in terms of how this naira redesign policy has impacted liquidity, I understand well over 1 trillion naira has been attracted to the banking system. But then, of course, it does appear as though the central bank has quickly mopped that up. Can you just talk us through how that has worked out?
Oh, yes. So as we know that due to the naira redesign policy, lots of cash deposits have been coming into the system, and the CBN has also been taking such out. Last week, the industry figure for CRR debits was about 845 billion. So yes, the CBN is doing well in their policy.
All right, and let's talk a bit about where rates are headed, though. So we've run through the first month of the year. We've seen the bond calendar and the first bond auction. How do you see things playing out in February?
Oh, I believe that things market situation will still play out as it did this month. Liquidity is not expected to abate. We'll still see lots of cash deposits in the system. We still have rolled over CBN swaps in the system. We're expecting FAC next month, as well as coupon payments and T-bills maturities. So money market rates will still be at floor levels of 10.5%, and the bulls will still dominate the markets.
Of course, the big event this month is the elections. And I wanted to hear your thoughts about how that potentially could impact market sentiment for government securities.
For now, international investors have stayed off. We even have seen some international investors remove Nigeria and Nigerian securities out of their portfolio. So for now, we mainly have domestic players in the market. Pending the results of the elections, then we'll likely see a return of international investors back to the markets.
So let's focus on those domestic investors. What's been the sentiment? I know the fixed income market is dominated by the banks, but we also have some other institutional investors as well. And then, of course, there is the corporate bond market, maybe not as active as we would like it to be, but it's still there.
So for now, corporate bonds, like you said, they have been having a very good time in the market because the market is awash with liquidity. So interest rates are not climbing as high as they should. So we have seen mainly corporate bonds be issued at single-digit levels because of the huge liquidity. So domestic investors are looking for every avenue to plug in their high liquidity.
I gather that short-term T-bill rates are currently at about 1%. Now, that obviously tells me that the market, as you mentioned, is awash with liquidity. Do you think they're likely to inch up next week?
No. As long as we still have an influx of cash deposits in the system, for several days past, we've had system liquidity be over 1 trillion. So as long as we continue to see lots of cash deposits in the system, I highly doubt that rate is going to inch up.
So will increased demand, though, for bonds and longer dated instruments bring down the yields in that segment? What do you anticipate next week?
Yeah, well, of course, we know that federal government, the appetite for borrowing is quite high. At this last auction, we saw them offer 360 billion compared to the 225 billion they regularly offer. So yes, although appetite is high and government wants to borrow, yields might inch up a little, but not as much as expected if the system wasn't awash with so much liquidity.
All right, let's talk a bit about the forex markets and the outlook for the naira. As I mentioned earlier, the big event this month is the election. How do you think that could potentially impact the outlook for the currency?
Well, we have seen that with OPEC muteness and Nigeria having a chance to finally meet up with this quota, we have seen Nigerian production quota inch up from 1.1 to 1.2, and definitely that's going to have some impact in our external reserves, but it's not going to be immediate. It takes about 60 to 90 days to see an increase in our external reserve. So yes, I believe that an increase in our external reserve is going to help the central bank with strengthening the naira.